Hey everyone, I'm Dave the Tax Navigator. Today I want to take a closer look and explain what tax brackets are and how to use them to calculate your tax liability. And once you understand how your tax liability is calculated, you can start doing your own projections and looking into making moves to help you save on taxes. So before we begin, the following content is for informational and educational purposes only. Although I am a licensed CPA, I am not your CPA. A taxpayer's eligibility to take certain deductions and credits may vary from year to year based on their facts and circumstances. Please contact a trusted tax professional to obtain advice tailored to your specific situation. The U.S. federal income tax is a progressive tax system. This means every dollar of taxable income will be taxed at a different rate based on your tax bracket. As of 2018, the U.S. has 7 different brackets, and each one consists of a range of income taxed at that bracket's given rate. Again, as of 2018, the rates currently in use start at 10% and go as high as 37%. There are 2 primary factors that determine which bracket you might fall in: your filing status and your taxable income. You declare your filing status on your tax return, and it determines the range or the width of the brackets which you will use. You can claim one of 4 filing statuses: single if you're a single wage earner with no spouse or children; married filing jointly if you're married, you're eligible to claim this status; married filing separately, most often used when a married couple is going through a separation or divorce. There might be other practical applications for it if you're happily married, but we're not going into that in this video. And the last status is head of household, most often used by a single parent or a single person taking care of an elder parent. This is a very high level and incomplete overview of these different filing statuses. They can get surprisingly complex at times. And then your taxable income. This includes your wages from work, side hustle income, any adjustments to income, and any eligible deductions. After accounting for these things, you arrive at your taxable income, and you're now ready to find what tax bracket you fall in. Please note, I am only covering income tax in this video. I will make more videos going in depth on self-employment tax and long-term capital gain rates and some of the other taxes that might be on a tax return, again, in separate videos. Here are the tax brackets for the 2023 tax year, which taxpayers will use when they prepare their returns that are due on April 15th, 2024. One thing I'd like to highlight here is the range or width of each bracket and how it's different based on the filing status claimed. As you see, the first bracket is at 10%. For single filers, that's capped out at $11,000. For married filing jointly, it's $22,000 that's taxed at 10%. And head of household filers, $15,700 of taxable income is taxed at 10% first before moving to the next brackets. So let's take a closer look at the brackets for a single filer. For a single filer in 2023, we see that their first $11,000 of taxable income is taxed at 10%. Taxable income that exceeds $11,000 but is less than $44,725 will be taxed at 12%, and so on and so forth. As taxable income increases, so does the tax rate that your income is exposed to the point where every dollar of taxable income greater than $578,125 is taxed at 37% if you're a single taxpayer filing in 2023. So let's work through an example and assume I'm a single taxpayer filing in 2023 with $90,000 in taxable income. The first thing I want to do is figure out what is the highest tax bracket I'm exposed to. In this case, $90,000 is much higher than $11,000, and it's higher than $44,725, but it's less than $95,375. This means the highest bracket that I'm going to be exposed to is the 22% bracket. This table shows how to calculate your tax once you know what bracket you're in. So I'm in the 22% bracket, and this means my tax liability for 2023 would be $5,147 plus 22% of the amount over $44,725. So $90,000 of taxable income less $44,725 gets us $45,275. We multiply that by 22%, and we get $9,960.50. We add that to the $5,147 and get a total tax liability of $15,107.50, which we will round to $15,108 on the tax return. So here's a visual representation of this calculation. From left to right, we have our taxable income of $90,000. The first bracket ends at $11,000 and is taxed at 10%. So this comes out to $1,100. The next bracket ends at $44,725 and is taxed at 12%. This comes out to $4,047. Now remember, the first $11,000 of taxable income was already taxed at 10%, so only $33,725 is what's taxed at 12%. So before we go on, one more thing to highlight. $1,100 plus $4,047, that gives us $5,147, which was the number provided to us on the previous table. The next bracket ends just north of $95,000, but our taxable income only goes to $90,000. So the difference between $90,000 and the end of the 12% bracket are taxed at 22%. So this means $45,275 of my remaining taxable income is taxed at 22%, and this comes out to that $9,961 rounded. We add all three numbers together, and we get a total tax liability of $15,108. Now, the marginal tax rate for this taxpayer is 22%, and all this means is that they fell into the 22% tax bracket for the given year. The effective tax rate is the rate that we're more interested in, and this is calculated by taking the amount of the calculated tax, which in this case is $15,108, and dividing it by taxable income, which is $90,000, and that gives us 16.79%. So even though you were in the 22% bracket in this example, the effective tax rate was essentially 17%. Not too bad. Here's another look at the table view of how that tax was calculated, in case that is more helpful to you. And so, now that you have a better understanding of how marginal tax rates work, let me ask you a question. Should I decline a raise or a bonus to stay in a lower tax bracket? Absolutely not. The reason being is we're never taxed at 100% of income. If you receive a $10,000 raise, your tax liability isn't going to increase by $10,000, even if a bonus or raise pushes you into the next bracket. Let's look at the math. A single taxpayer with $40,000 of taxable income would have a tax liability of $4,580 based on the brackets. Now let's say they get told they're going to receive a bonus of $10,000 before year end. This will raise their taxable income to $50,000. The first thing we notice is that they are now in the 22% tax bracket. But something to pay attention to is that $4,725 of that raise will be taxed at 12%. Why? Because the 12% bracket is maxed out at $44,725 and their prior taxable income was $40,000. The remainder of that bonus, $5,225, will be taxed at 22%. Doing the math, we realize that the taxpayer's tax liability will increase from $4,580 to $6,308 after a bonus of $10,000. That's only an increase of $1,728. The reason I bring this example up is it's actually a question I get asked surprisingly often. And I think it's important to highlight that we are in a marginal system and that this is how it works. At the end of the day, if you say no to the bonus, it's the equivalent to saying no to around $8,000. Now, we didn't account for state income tax, Social Security, Medicare, which means you would likely get a little bit less than $8,000 in your pocket after the bonus. But nonetheless, it's still money you didn't have before. Another reason it's useful to know how to project your tax liability for the year is that you can check and make sure you're on track, that you're withholding enough from your paycheck each period. So up here now I have an Excel sheet based on the example of $90,000 of taxable income. We expect a tax liability of $15,108. Now, if you're paid semi-monthly, that means you get 24 paychecks because it's twice a month. you would need to withhold $629.50 to make sure that you're paid up through the end of the year. Now, if your withholdings are higher than that amount, you're likely to get a refund at the end of the year when you file your tax return. If it's less than that $629.50, you're probably going to find out that you owe money. So it's kind of good to have an idea as you go throughout the year that you can make sure you're staying on track, especially if things change, if you get a bonus, you lose your job or take on an extra job, whatever it may be. And you can also see that if you're bi-weekly, you get 26 paychecks, the amount that you should be withholding. And that first example is about $581. So again, this is good information to know because that way you can kind of be in charge and make sure things are in check. If you enjoyed this content and want to learn more, please like and subscribe. Feel free to share any thoughts or questions in the comments. If you have ideas for other topics that you like explored, you can leave those in the comments as well. All right, until next time.